How are you doing? Welcome to Beach Investing. I'm your host, Andre Volkovsky. Today we'll be talking about a investment strategy. We have Cindy Wennerstrom here. How are you doing?
Hey, Andre.
So there's two main strategies that people use when they invest in real estate. One is the buy a property and rent it out. Another one is the flipping a property. So they buy it, they renovate it, and they flip it right away. So another strategy we're going to be talking about today is called the long, slow flip. And the reason why we have Cindy here is because she uses this strategy several times. And we're actually standing in a property that we both own and that we both are using this strategy. So Cindy, tell us about this strategy of the long, slow flip that you use.
Sure. I believe in holding property. I believe in hoarding property. I like to know that I'm building a retirement package for myself with each home that I purchase. So with this particular property, the second I walked in, I knew I had to have it, and I told you that. And I knew exactly what I was willing to pay for the property because I knew that it needed substantial renovations to bring it up to a level that my tenant profile would want to rent it for. As well, it's in an area of some serious gentrification, so we needed to make this place just a little bit more special. You can see from the fixtures and finishings around us. We don't normally do granite and glass backsplash, but we have here because we know that it will attract someone to rent the property, at the rents that we desire. So when I looked at this property, my outlook was definitely not a flip, although it is a fantastic flip property if that's what you're interested in doing. You could easily have bought this property like we did for $525,000. It is a duplex that we are converting to a triplex. We're getting those permits in process now, so we should have them any day. And to put $200,000 almost into it, which is almost what we did. We replaced everything from roof to drains, waterproof, new furnace, brought gas to the property, new windows. I mean, this was a full home renovation, pretty much a gut reno, which was not the original plan, but we're glad that we did do that because when we now refinance this property, it will appraise at a value of around $800,000. So we bought it for $525,000, put $2 in, we're now at $725,000. When it reappraises at $8,000, we've taken out $75,000 of pure profit to be split between yourself, myself, and our third partner. So that, you could just sell it in the open market and take that money and run, but that money is 100% income taxable. So $75,000 now becomes approximately half. And is it worth 3 months of your time to do that? Some would say yes, but then there's also fees associated with selling properties, agent fees, as well as legal, etc. So for me personally, my strategy is to create beautiful homes for people and for tenants and to hold these properties and make more money over a longer period of time. That being said, once it is tenanted and we have beautiful furnishings in here with our tenants, we will have an appraiser come through, refinance, and then we will then use and leverage the bank's money to remove the equity that we put in, which was our renovations of $200,000, plus that other $75,000. We have to leave 20% of that in, of course, for financing. But we're going to then take that almost $275,000, use that money to go do this again at another property. And that's the strategy I like to use, leveraging the bank's money to then further your retirement savings plan.
So when you look at this property and you say you could potentially make a quick $75,000, but what is your long, slow flip plan for this property, and not only this property but other properties that you use?
Right. So for me, I don't like to think of holding anything less than 5 years.
So 5 years.
5 years. 5 years in real estate is actually a very short period of time. We're not dealing with a fluctuating stock market. We're dealing with cycles in real estate, which can take a lot greater amount of time to change and shift. I want the property values to go up quite a bit before I want to pull my money out. In fact, I don't even know if I want to sell this property in 5 years, but at 5 years, it'd be a good checkpoint. Even 3 years, 3 years, 5 years, 7 years, 10 years, check in with your properties in the market. Always know what's going on with the market. That's why we rely on you. But at the same time, you can plan for changes and shifts. And I truly believe that if you have good tenants in your properties and you're cash flowing, why sell? So for this property in particular, our two units are renting for $1,900 a month. Another unit for $1,700 a month. Our net cash flow per partner is around $700 per month. So let's just say it's 1,500. You know, if we were to hold this property for 5 years, the amount of money that we would generate and revenue that we would generate from this home would far surpass that of a flip. So for instance, a 5-year hold just on rental revenue is, you're looking at around $90,000, right? And then you've got your positive capital appreciation of another, say, $200,000, because the property today would sell for 8. In 5 years, I know it would sell for $1 million. So you're now making around $400,000 instead of just a mere 75. And that's what I see as the big picture. It's the longer, slower flip. We've already flipped it, if you will, by refinancing it. So people who are flippers and want their money out fast, you're getting your money, but now you have money to go do it again. So as long as you're buying properties in a portfolio that's strong and you have great cash flow, your mortgage broker can set you up so that you can continue to do this despite, you know, all the mortgage laws and rules out there that prevent people from doing it incorrectly. He can or she can help you plan for the 5-year plan, which is continuing to build that portfolio of properties.
Okay. So thank you for sharing that. It's called the long, slow flip strategy. It's a fantastic strategy for the long term, but again, there are other strategies, but this is one that we feel that works very well, and it's less risky, but you still need to do your education, your learnings on this, and yeah, good luck. Thank you.
Thanks, Andre.
All right.